Hey, this is Julie. Thanks for coming back. We'll do another video real quick on chart review. Top-down analysis, starting with the ES on the quarterly. You can see the market rallied up to these quarterly ones just underneath a 90-day two and sort of stalled out, which you would imagine, seeing because the ones are defended a lot of the time, especially on that first touch. So we got that consolidation inside the distribution and did not see the further out of the band range expansion. So when the range expands on this one period over the 14 period daily distribution, you can see that we find that the range expands in the market, and that can go either up or down. But in this instance, it went down and then came back inside the distribution and trickled back up. So on the monthly, we're at the monthly twos at that quarterly one. So there was an actual monthly, quarterly, resistance area. So it wasn't surprising to see that consolidation there. On the weekly, these are 7 day ones and twos and threes and the dash dots. And the solid and regular dash are the weekly time frame, the way we can um, calculate the data on whether it's the number of days in the week or a calendar time period. So we can go into that in more detail with you. But you can see we went from the weekly twos down in April 30th, May 1st, and then bounced all the way up to the upper monthly twos and this 7 day three right there. So that caught the price into that consolidation when we hit those monthly, quarterly resistance areas also on the weekly. So, definitely an indication that it found the target. Doesn't mean that it is moving, right, to go back in a retracement at this point, but that could likely happen. We just have to wait to see how it shakes out going into Monday. There's some economic activity Tuesday, Wednesday, Thursday. So Monday, I'm not really sure what to expect. This is the daily distributions in solid with the implied volatility weekly running in horizontal. So the implied volatility for this week coming up, which is OPEX, the mean is 42.45. And I run the calcs based on quick strike, and this is for Friday's expiration, which is OPEX EW3K4, and this is options on the E-mini. At the CME, and you can see I'm using the Black-Scholes model calcs on the settlement, and I have captured the levels of at the money and then in the money, as well as the first standard deviation on the chart, as these are statistical levels that you'll also see the market responding to. I have not, noticed delta. I do that on a daily basis as the implied volatility changes on a daily basis. So I'll wait and look at that on Monday. But going into the session, I like to look to see where those edges are, the tens. Um, as we get into OPEX going into the end of the options for ES, you'll see that theta may burn going into that a little bit. So we're currently at 390, and so if we look at this 5200, that's 2119, and if we look at this 5285, it's 1989. So the theta burn is greater going higher than lower, getting to this at the money, in the money on the weekly. So just keep that in the back of your mind. If they're trading theta going into the OPEX, it would be on this 52.85 strike. And that would be 10.52 implied volatility, showing that lower. Let me change this to end of day volume. And you can see that the market was pinned at this 5250 area on Friday. And the open interest going in at this current time shows those upper calls. So it's still, and I don't have any data yet. So let's just discount this and wait until Sunday opens. We'll get data. So, but the levels, should help guide us. Let's take a look again. We're at the quarterly one and monthly twos. So, Tuesdays when the, reports start coming out. PPI on Tuesday, CPI Wednesday, and retail sales on Thursday with jobs. So it might, get a little bit of a volatility pop. Tuesday, Wednesday, Thursday. I'm not sure what Monday could do. We could just sit flat. S&P 500 largely showing that same, once it went back inside the distribution, that drift up. And it was more like a slow drift up. It wasn't, racing higher by any stretch of the imagination, but that slow drift. The 23 30 day for the SPX, I like to just eyeball it like I do with the VIX. We'll take a look at that in a second. And you can see that we drifted up to the 2330 day ones and stalled out here. So they were using this as resistance. So the SPX and the VIX, are calculated basically. The VIX contract is using SPX options. So to see this distribution lining there signified that potential resistance area. On the daily VIX, you can see we had that slow descending channel quite well. They were selling the ones, and each time it got up to the ones. This one they just jumped the gun. And here was a screenshot I showed earlier on Twitter, the VIX daily with this 23, 30, 37 day distribution on it. You can see that it popped the one day over the 14 all the way up to 3, which is, where it went the second pop. So each pop went up to 3. In case you'd like to make note of that, 3, 3.5 seem to be where it tops out. Recently, for the current volatility this year, March, we saw a higher breakout of 23, but overall, in a normal, I would say, volatility spike, when you get to $3 on a daily basis in the VIX, 3 points, you might look to see if you're going to find that decelerating vol. Here it is on the term structure. I like showing this because, guys, this is like I can put the one period on top of not only the daily but the weekly. So I can run, here's the daily, 1, 2, 3, here's the weekly, and here's the monthly. So you can see that we got to the weekly twos here. And down here you notice when it gets to the weekly one, it can often act as resistance. So just FYI, whenever the range hits the weekly one, be looking to see if you're going to get that continuation thrust, and look to see where that might be going. If it leaves the one, where does it go? It goes to the two, and look, one to the two, one to the two, and that's on the daily, weekly, one to the two. And here is the daily 1, 2, 3. So, if that daily, weekly confluence like it did here, that would have been a great target to trade to. So that's like a daily, VIX range expansion might be coming to an end. So this is pretty cool the way we can look at this, more ways than one. Let's take a look at NQ. I did not put the options on the NQ on the chart, and I didn't choose the crude options either. So, if that's something that you would like to do, you have my template of how I apply, option levels using the at the money, in the money, and the, 1, 2, 3s for implied volatility, and then see where they line up on the historical volatility, real volatility lines that we can get with JATs. So here's that daily NQ. You can see that it stayed inside the daily ones, um, sort of flattened out, not as big of an elevation. So we ran up and then went flat. And here's the weekly NQ. As I've got a lot of lines here, the gist of the week is it went from 2 to 2, and a little more. So here were some twos on a 1, 1, 2, 3. So basically this 1, 2 combo, and here was the top 1, 2 combo with a 3. So we've got a lot of lines on the weekly because you can run it on a number of days in the week versus, 7 calendar days, and on the open and the close. So four levels for the weekly, and I like to look for those confluences. But the main lines, like this is a, let's take a look. Which one is this? I think it's the weekly. Yeah, the 1 week. Let me get these fibs off of it. So the 1 week here acted as, resistance. That's pretty important, to me, that the level's holding. So here was that little, trying to break out a little bit higher on this 30-minute bar. You see we had the 30-minute thrust. This is a good way to look at intraday trading, using a 30-minute one period over the 14. Um, but once it goes back inside the distribution, kind of hard to break that range is what I'm trying to say. So the monthly NQ, let me refresh the chart. Anytime you change instruments, you need to refresh the chart. So you can see that this monthly distribution worked really well last month. Hit that monthly 3, broke the ones, came in. You can see the monthly one holding the support. I hope you guys are seeing this. Break out. There's your 2, there's your 3. If it leaves the 1, it goes the 2 and the 3. And then it bounced back up through those ones. That's where I thought it was going to come back down, actually. And they faked us out. They sent it back up. And we're sort of sitting here inside the monthly range. Now we're right in the middle of the month. So that's just about right where you would expect them to put you, right? Right in the middle of the one. I mean, exactly. So if we were to fib this right in the middle of those monthly ones, you would see that they've got the market sitting there. So they know what they're doing as far as placing price inside these ranges. Right here where we are, look at that. So it's inside of a normal distribution, pretty accurately on the monthly at the averages. So That's why the averages are so important. I mean, they really are. I don't like to see them remove that data from the CPI. If they can help it, at least publish it somewhere else as a whole report, not just little pieces. Let us see what the whole report would be. All right, so here is the 30-day or 90-day 3 month, and you can see likewise we're right in the middle of the range on this quarterly distribution. So, really waiting for economic data to come out to see whether we're going to continue that rally and maybe get some new all time highs or whether we're going to get a little pullback. Hard to say. NQ in the 2337, 3037 doesn't, I don't think it really applies, but you know, looks like this there was a little confluence area here, so that's interesting. And you're coming into some ones. So maybe 18,617 going in, if we get a little more extra going into the Tuesday, Wednesday, Thursday. Okay. And then let's take a look at crude real quick. Copper was on fire. I have enjoyed, learning about that market, and it also responds very nicely to the JATS levels. All right, so crude, we got a little bit of a sell-off going into last week, and we sort of got that flat week, which is so common with crude going into that range trade. So very hard to trade tops and bottoms in crude because it, goes back and comes right back at you in that range trading. So lots of up and downs. Kind of wild to be a crude trader these days. But if you get on the right side of a move, it can be very lucrative, as many oil traders will tell you. And they have precise, um, methods. Either they're doing macro on supply, demand, or they're following a chart pattern. I think the chart patterns work pretty good. So here is the weekly. Let me refresh. I know that crude loves the weekly ones. And here you go. I mean, right there, weekly one and the weekly one on the bottom. So when I was telling you before the chart populated that crude loves weekly ones, it's because the crude loves weekly ones. And they ended it right in the middle of the weekly range. So, you know, these algorithms know where these ranges are. If you do, if you can get that concept of price and time in your head, and then, you may have other methods that you like, volume profile or VWAP or moving averages or whatever other methods you like for your charting, you know, Bollinger Bands, whatever donkey and channels, whatever it is. I still think you need to get an idea of price and time, and we have that on the chart already ready for you right here. So let me refresh this, and you can see that we've got, monthly ones catching the price, monthly ones on the upside. So I hope you start getting it. So monthly ones contained crude, spikes, wicks and tiers above it, and they held it so far. There is a lower 30-day one at the monthly twos, so that looks like a very good confluence area at 74.75 for crude if this breaks lower. And quarterly, where are we on the larger picture? Let me right click and reload, and we're right in the middle of the ones. And we went up to the quarterly ones. I mean, I'm not, these are not back paint. This is something that you've got to understand. This is real levels that you'll get the same levels that I get. So if it's just applying the right number of days and the time frame. And I work with my customers to help you set up your charts and give you some templates to help you along your way so you can do these chart analysis and get a bigger picture of where you are. Going into the middle of a range is very difficult. So we're in the middle of the quarterly, we're in the middle of the month, and we're in the middle of the week. So, you know, throw some spaghetti on the wall. You could get that further range expansion to the downside on a daily. We'll get new distributions tonight when the market opens. But yeah, put it all together. You can see that this market likes the daily ones also. So, all right, that's about all I have for you. Tuesday, Wednesday, Thursday for the economic reports. And it looks like, you know, the market is, projected to be in line with expectations. So that might be, favorable um, result for market movement. So keep that in the back of your mind. Any changes to the numbers is when we can see that wider change in range. Just keep your eye on the JATS PT range levels. We can give you weekly, daily, monthly range, uh, expected range. It's not 100%. Markets can get anything happen at any time, so but we can give you those averages that are so important. All right, kiddos, we'll talk at you later. Have a good one. Bye bye.